Hello there, guys. Good afternoon, good morning to whoever is joining me today. Hope everybody is well. Going in a couple of minutes or so, as usual, just going to give everyone the opportunity to jump in. Let's get that pen tool up, actually. Just going to put my pen tool up there. Good afternoon. Good afternoon, Roberto. Hello, Vincent. I'm doing well. Hope you're well too. Hey, Justin. Welcome to the stream. Hope you're well too. We're going to do our usual breakdown of the markets. We're going to go over some of the data that we've got coming out this week. We've already had a little bit of data out, but we'll go through some of the stuff that's coming up this week. It is the last sort of week of the month. It kind of ends on Thursday. We then have September the 1st on Friday, beginning of a new month. So we could be looking at maybe some low volatility coming into the end of the month. You can see some high volatility depending on the outcome of some of the news events we've got coming up. I'm going to go through some of the stuff that I'm looking at the moment as well. In a position here on euro dollar at the moment, so that's doing pretty well. We were talking about obviously euro dollar coming into sort of last week as well and the week prior. Actually getting some setups on the stream, which is pretty cool. We talked about some other markets as well last week, and they seem to be playing out pretty well. We did talk about the potential for gold to move higher, although it did dip initially. We have seen a little bit of a move higher coming in. So gold now kind of trading at the 1916, did reach the highs of 1920. So we'll cover all those kind of markets. Most importantly, obviously, is this US dollar index. You may notice the screen is a little bit different at the moment. I'm hoping it just helps visually with what we're kind of looking at. Hopefully you can see all the chart drawings on there. But let's go and have a little look at some charts of interest then. We like to look at the technicals. Very much looking at that sort of dollar bullishness going into the market. We actually go to a weekly chart again. Let me just sort myself out. Again, nice strong weekly close last week, which is nice to see. When we're looking for that kind of momentum to continue in the market, that's what we're looking for. We did close up around about the 104.50. We had like we attempted to sort of trade through that 104.50, came back a little bit, which could have led to a little bit of profit taking this week, which we haven't really seen. Obviously, in the UK, yesterday it was a bank holiday, so wasn't too focused on kind of what was going on around at that point. But yesterday we had a little bit of a bearish day. That today has been pretty much reversed here on the US dollar. We can see that we traded through the lows. We came into our supporting zone as well that we pointed out, which was these 4-hour highs, which was around about the 103.90s, 104 zone, and we've continued to push to the upside there. So dollar pretty much staying in that bullish trend at the moment. Now we do have some US dollar data coming up this afternoon at 3 o'clock. We've got the CB consumer confidence as well as JOLTS job openings, so we may get the reaction to that whilst on the stream. We also have non-farm payroll obviously this week as well, so that's going to be a big mover. Is the job numbers going to come down? Are they going to reflect the potential for the Fed to pause interest rates? That's the sort of question that everybody wants answering at the moment. And it's looking more likely that we are going to see a pause in this September meeting. We're going to take a look at the Fed Watch tool on the CME. Let's bring that down. In here, we can see that it has come down slightly. So there was last week, it was sort of around about the 86% chance that the Federal Reserve are going to pause interest rates. Now it's come down to about 78.5%, 21.5% in favor of a further rate increase. So that number has come down. But we'll see if that changes towards the event. Obviously, like we said, the Fed are going to look at the data coming out. And if the data shows that there's a need to hike interest rates further, they will. They said that Federal Reserve Chair Powell said that last week. So still some scope there for the Fed to continue raising rates. It's just more likely that they are going to pause rates this meeting, then maybe hiking the one after that if they feel like it's necessary to do so. A little bit different than what's going on in England at the moment, or in the UK. Bank of England potentially looking for another rate hike. Inflation rate still quite high in the UK, so potential for the pound to be a little bit stronger coming up soon as well. So we'll take a look at that. Really speaking though, dollar bullish at the moment. We're approaching new highs, 104.40 and that 104.50. A break above 104.50 this week could spell a little bit more upside. You can see looking left over here, the next high comes in around about the 105.75 area. So yeah, if I just put 105.75 in there, just grab this. Let's put the coordinates in at 105.75. These highs that formed back in March. So yeah, I think a breakout of that's going to see that move up to the 105.75. And if we just go back to that weekly chart, you know, since the start of the year, we have been kind of ranging between that sort of area down to the 101s. With a brief spell below the 101 before price started to then climb back to the upside here. So yeah, we'll see if that can continue. Like I said, I'd like to see a break of this if we are going to go see those 105.75s. I would expect a bit of a break, to be honest. And if we are going to see that dollar strength continue, what could that mean elsewhere? One of those, euro, still very bearish at the moment. So again, just kind of taking in this weekly trend at the moment. We are pretty much working in a little bit of a sort of, I'd say, range here. Let me get rid of that a second. You got this kind of move. Very similar to the US dollar index, obviously. Just inverse. And, you know, if dollar index is potentially going to break out those highs, does that mean euro US dollar could break these lows here and head down to the next level of support, which we have mapped in at the moment at the 1.0650. Okay. Again, which were these lows that formed back in sort of the end of May. So that's something we can look for potentially if we do get that continuation of a breakdown. I was again looking for a bit of a continuation of this today. I did like the idea that euro could be weaker. Obviously, last week we saw a lot of euro weakness. Poor PMI figures was really what set the tone there. And I think if that's going to continue, could be some further downside. And these are the sort of low areas I'm targeting. Maybe 106.50 is a little bit too low, considering that is the wick. You might need to sort of bring it up to around about the 106.80s. I'll round that up to 75, which is pretty much it at the moment, because then at least we're incorporating these wicks. But again, remember guys, I use these as sort of zones anyway. It's not just that sort of key level there, but it's just the zone that we're in at the moment. So yeah, let's go take a look at what I was looking at. So we are coming back into these swing lows down through here, but pretty much just looking at that hourly chart today, we could see that price was breaking through this trend line resistance or support, I should say, considering the fact that it's been used as support here as well as here. So I was looking to see, will it act as support again, or will it get some kind of break to the downside? We got the breakout, ended up looking at the short on a pullback in here. Stop loss is now break even on this one, to be honest. Looking to see if we get the sort of follow through. I'm looking to target these swing lows down through here, essentially. But at the moment, we're getting a little bit of a pullback on the open. So we'll see if that does continue. We'll see if we do get that push down. We might just be seeing a little bit of a surge up here just before taking that sort of move to the downside. So we'll see what happens. Going to monitor that one fairly closely, but don't really need to do necessarily too much considering stops are at break even. But this one followed the strategy really nicely. Let me just get rid of all this. So yeah, I like euro downside. I like euro downside. I think we could probably even look at euro downside against some other sort of markets as well, considering the fact. Oh, I didn't mean to do that. Considering the fact that we've got some of the sort of stronger currencies at the moment. So, like I said, euro pound could be one to watch. You know, although that is kind of saying the opposite at the moment. Looks like euro's getting a little bit stronger here. Euro pound could definitely be one to watch going into this week and into next week. I think it's next week actually that we have the monetary policy report hearings out of the UK. Let's have a quick look. It might be the week after. So it's the 21st of September. We've got the monetary policy bank rate decision out of the UK. So could be some build up towards that event. So yeah, definitely one to watch there, I think, the pound. Going on to some, we'll go and have a little look at pound US dollar in a moment. But I'm going to go over to the yen first. The yen's still a big topic in the market. I still like yen weakness. This is something that we've featured quite often. Let me just get rid of a couple of these breakout points now. So this is what we talked about last week. The two sort of long positions in here. We were targeting these previous swing highs. The market has absolutely blown through the rest of blown through these highs at the moment, and is now, you know, continuing higher. We've now breached the highs by around about 100 pips or so. So yeah, yen weakness evidently in play as well. We can see the likes of Aussie yen, which is something that I quite like the look of. CAD yen starting to rally, euro yen, and pound yen. So yen obviously a weak currency at this current moment in time. So I like the idea of continuing to look for that play. I like it against the US dollar a lot. Obviously, we've seen the dollar be bullish, so seeing dollar yen rally is not particularly surprising. We're above the 145 intervention level as well, which is great. So yeah, this one continues to sort of rally. So I still feel like this one has some legs to go. If we look at it from that weekly chart, really the ultimate goal is to see price up towards the 149, 150. Let's just put in the 149 on this level up here. But ultimately, that's where I see sort of price coming into. So, you know, if we could look at some, or what I'm going to be looking at personally is some strategy setups to continue to look for opportunities long. Now, one thing we looked at last week was the fact that price pulled down. We didn't get a crossover in the 50 and the 200 moving average, which was good. That stayed in line. We then had the sort of breakthrough on the RSIs, which gave us these opportunities to get in. So yeah, really good moves there. Looking for a pullback continuation move now, pretty much. If we can get that sort of, let's say, like a pullback down into this area, maybe. then 146.50 could be the sort of next area where price decides it wants to continue higher. So keeping an eye here on dollar yen, just because I still like that upside fundamentally. Now, I do think there will be a little bit of a sort of interesting dynamic going on at the moment. Obviously, the Bank of Japan's still not looking to do anything with rates so far. But obviously, we have seen some CPI data out of Japan coming a little bit higher and whatnot. So I do think that at some point there may be some kind of policy shift. Will it be anytime soon? Probably not. We'll probably see more of an intervention before that, I feel. So, yeah, going to be looking to see if we do get that around about the 149 handle. That was the last time, or that's the sort of last time we have some evidence that the Bank of Japan got involved and intervened. So I like the idea of potentially seeing price come to that 149, see if there's any kind of intervention going on. And that could be something to watch out for there for the Japanese yen. But I feel like the yen's still something where people can focus their attentions on, even coming into sort of that month end. So yeah, definitely keep an eye on that one. Let's see, Vincent here, short New Zealand dollar from 59.30 and stop loss at 59. What can you say about my stop loss? I used 180R on the 15-minute. Okay, let's go dive into that a little. I like Kiwi downside, very heavily short Kiwi. Again, weekly candles, very bearish coming through here. There's some nice supporting zones coming down. Let's go take a look at it then from a lower time frame point of view. The only thing I would say about Kiwi dollar at the moment, get rid of all these lines for a second. I'm just going to bring in another line, which was at that 59 handle. That's my only concern. My only concern was that we were at the 59, and you can see when I've been looking at positions into the market, the targets are all at the same area, okay, all at that 59 area, because price is finding support at these areas. Okay, we can see it every time we come into it. Buyers are stepping in, even though here we've had a consolidation. Price is really struggling to trade through that level. Even now, although we've got quite a strong bearish breakout potentially forming, we haven't technically taken the low there yet. If it does take the low and we break out, then great. That's a good market to look at again. I just think at the moment that might be a little bit of an aggressive move. What I'm going to do, Vincent, is just take off. Let me delete all these. And what we'll do is we'll take off all these. I think it will remove where they are on the side. So we've got less distractions. Let's go down to that 15-minute time frame. I'm just going to take off the MAs. Get that clean price action. Nice head and shoulders pattern there today, actually. Let's pop on this. And we can actually build in, have a little look at that. So 59,303. Profit level, I'm just going to leave it. There like that. And stop loss level 59.42. Okay, and I'm currently short. So what can you say about stop loss? Well, one thing I would say is, you're pretty much 2.5 hours up, which is good, really good. For stop loss, I mean, the stop loss is pretty good. The only one thing I would say is you've got this spike over here. I think that's the one thing I would say, and we're not kind of above that. I would be more inclined to try and get my stop loss just above. Whoops, I wasn't meant to do that. I would be more inclined to see my stop loss just above that level there, just in case price wanted to go and seek these highs for whatever reason. That'd be my only sort of concern. Other than that, I mean, 11 pips is quite tight. I mean, did you consider your spread as well? I know spreads on Kiwi dollar can vary, but also, you know, you've got to take in consideration your sort of spread. I mean, above that high is 15 pips. 20 pips would have been a lot safer in there. But if you've used ATR, then you, at the end of the day, you're using the market's volatility to your advantage, because the lower the ATR, obviously, the tighter your stop loss can be, and that's how you can sort of take advantage of these, you know, moves in the market, or advantage of sort of higher risk reward ratios. I'd say that's a great trade. I don't see anything wrong with that. I mean, if you're looking at stop loss management now at the moment, I would be looking at considering the fact that you are, you know, where you are. Like I said, if it was 2.5 up, then if you banked half your position, you banked 1.25%, which is great. You could then move your stop loss to break even. Or the one thing you could look at doing is, if, let's say, you know, price continues and breaks this low down through here, then you want to be putting your stop loss by the previous lower highs. So let's say this happens and something like that, then you can bring your stop loss into and above that lower high there. If it breaks again, then you can bring your stop loss into this lower high, for instance. So you can just start tracking it via the lower highs. Again, that's got to depend on sort of your plans, your strategies, where you think the market is going. So if you've got an open target on this, that's something that you can, or something that can be implemented in order to kind of protect your capital on the move. Obviously, we've got 58 sort of 75 pending here. Let's just go to the daily time frame and zoom in. So the reason why we've got that pending there is that because of this area in here. What I would say though, again, is remember that these are zonal. Okay, so if we were to expand the zone out, it would look something like that. So, you know, there could be an option here for you to just be a little bit careful, because we are still at that support level. That's the one thing I would say about Kiwi dollar. That's one thing that's kind of kept me out of it this week, or even looking at it this week, is because that 59 level continues to be a barrier. What I don't want to get caught on is the fact that, what if there are, you know, what are the reasons for price to keep getting stuck there? Well, you know, even though the dollar's breaking, Kiwi dollar seems to be finding this sticking point at the moment. So I would feel much safer if price had traded through the zone first and then look at something. But that's just because, you know, I'm a little bit more conservative in my trades anyway. So yeah, but I don't see anything wrong with that. Stop loss was pretty good. Is there a reason why you're asking about the stop loss, Vincent? Is there something that you wanted to have done differently? Let me know in the comments. Let's go over to cable. Obviously, cable's also had a pretty good time recently. Difference being is we're starting to see breakouts of sort of key areas now. So we've been very interested in sort of the one spot 26.50 level. We've also been quite keen on the one spot 31. Beyond that, we've got the one spot 23s. There. So, you know, now we're breaking down through this level of interest. It could be one of those where we do start to see a little bit more of a breakdown here in cable. I think these sort of interest rate play here could play a little bit of a part, you know, especially if the Fed do decide to pause and the Bank of England decide to hike further. Then there could be some idea that the cable could continue back to the upside. But I want to see price back above 126.50 if we are going to look for anything like that. At the moment, we're below it. If I go to our 4-hour time frame as well, and if I was to bring on my averages back in, you can see that the 50 and 200 are still bearish. Nothing really much more to do there. In the video this week, I discussed, let me just take period separators off here. Where do I find that now? Can't find where that is. I have to leave it on the screen for now. Can't find where the period separators are. I just thought it might be a little bit distracting with the blue dots across the screen, but I'll leave that on for now. Looking at it from a daily perspective, you can see that there's this kind of consolidation here, right? So that's quite interesting to see that we're consolidated at the one spot 26.50 handle. We've then traded through it. So that to me was a little bit of a bearish sign. You know, could we see price continue lower because we've traded outside of that consolidation? Because what that says to me is that we've accumulated here. Buyers and sellers were happy with price. They were trading between this point. They found that this area was fair value. And then the sellers have won. Sellers have driven price to the downside. So, you know, just watching here to see how we do play out. Do we continue to break lower or not? Again, if we go to the 4-hour time frame, you can see that now we consolidated on the daily, but now we're also consolidating here on a 4-hour time frame. So, you know, I would like to see price trade through this, retest, and then maybe consider a continuation to the downside. Ultimately, price may trade within this range here. So if price comes to the top of the range, then range traders might be looking to continue to push prices lower. What we don't want to obviously get caught in is the sort of the buy in there, because we are looking for, you know, technically the trend is bearish. Sorry, last time you mentioned something about the stop loss. I've taken note of what you just said. Thank you. Yeah, you're welcome, Vincent. Yeah, stop losses are hugely important. Not only do they protect your capital, but, you know, you've also got to use them in a way that you don't want to be stopped out too soon. You've got to let the market breathe. And if the market has a chance to return back to a previous, you know, high, then if you haven't let the market breathe, it's like, for instance, here, really, isn't it? You know, if you were short because, let's say, of that candlestick in here, and you thought, right, okay, well, I'm just going to put my stop loss above the candle high, which is a very common practice in retail trade, and I'm just going to put my stop loss above the high. Look what happens. Price then breaks that high, and we get a big move to the downside. Okay, some people call that a liquidity grab. You know, that could just, you know, be unsettled orders up here, especially if you're looking at kind of volumes and stuff and the futures market. But, you know, essentially you put your stop loss in a way where it's not going to be, you know, sort of protected and out the way, right? What you want to, obviously depending on time frame you're trading as well. If I was trading that move there on this time frame, and let's say that was it, I know looking left that there's a high over here, you know, so I at least want to be above that high. And then obviously, you know, depending on your risk reward ratio, you want to be looking at sort of obviously trading to the downside through there. Keeping it above that high is just way too close. And that's why I say sometimes it's good to add the ATR on top of the high, because it can give you, you know, bring you above these type of things in the markets. So yeah, definitely something there. Cable though, at the moment we are range bound. I'm just looking to see if we continue this pressure to the downside. 126.50 obviously being an important point. We've also got the 50 MA running down there on the 4-hour time frame. On the hourly, you know, we do have the sort of range and a little bit more of a sort of detailed view. You can see it like that. So we'll see if we get that. So let's have a little look at some data. Some data's just dropped. Looks like the dollar is having a bit of bullishness off the back of that. Weakness. Sorry. CB consumer confidence came in lower. So we can see here CB consumer confidence came in lower, came in at 106.1. They were actually forecasting it to come in at 116. We've had a revision here on the 114, revised from 117. So a drop there from the previous numbers, as well as this number in here. Jolt's job openings also down from 9.58 to 8.83. So some serious dollar pressure coming into the markets there. Let's see how that euro dollar is probably out now then at break even. Yeah, so out of that break even, which, you know, is to be expected coming into high impact news. So yeah, we'll see what happens next. Obviously the dollar's having a little bit of a reaction to this at the moment, so we'll see if that can continue or whether it's just a short-term thing at the moment. So this is the month-end volatility. You know, again, we kind of talked about this last week in terms of the seesaw effect of the market. So I like to put the seesaw there. You then have obviously the saw, you know, and if you have high volumes in low volatility. And that's the period we're in at the moment. Okay, we're in a period of low volatility, which means high volatility. And low volumes. Just finish that off there. So, you know, it basically takes less effort to push the markets around at the moment. And that's what we're seeing. A lot of the dollar data is getting exaggerated at the moment. A lot of other data is getting exaggerated at the moment as well. And that can make it a little bit tricky to trade. But there could be a little bit of a pullback here now for the US dollar. So we'll see how that one comes in. Obviously, forecasts were coming in a little bit higher than expected, apart from the Jolt job openings. That's a bit of a mouthful, that one. That did come in quite considerably lower than forecast. So that's, yeah, is that something that we can probably take into sort of tomorrow? We have ADP non-farm employment change. That's expected to fall from 324 down to 195. We also have the potential for non-farm payroll at the end of the week to come in as well. So yeah, definitely an interesting week. Dollars are really feeling the pressure of that at the moment, though. So let's go and take a look at that in a bit more detail. Nice aggressive move there. If we trade through these lows here, obviously we've got the 200 moving average as a little bit of a sticking point. You can see it was a sticking point back here in the past. So we'll see if we can trade below that. A break below the 200 moving average would be sort of considering there's a bit of a change in sentiment here for the US dollar index. So yeah, we'll see if it can remain that way, or whether we get a bit of a rebound in here. But yeah, dollar's not enjoying that news at the moment. Market participants seeing that as really bad. Getting a little bit of a move down there. I mean, CB consumer confidence is an interesting one, isn't it? It's all to do with consumer spending. So if that's down, are they going to be spending? Are consumers going to be spending less in the markets? Is that then going to fuel the Fed's choice to leave rates unchanged? I wonder if that's changed anything on the Fed watch tool in that instance. Still on 78.5%. See if that changes going into tomorrow. What other markets are of interest? Obviously, Vincent, I hope you still got something out of that position in there. Dollar yen's pulled right back into that zone. This is going to be interesting, not only from a technical perspective, but if we just grab in the volume in here, we're going to be coming back into a little bit of a support zone in that volume. 146 was the point of control. Low was 146.35. So, I mean, this is where it can get quite interesting looking at news trading, because obviously the news has driven price down into a zone of interest. Now, has anything changed on the bigger picture? Still, possibly no. The fact is that we could still see a pause. Poor data equals more likelihood of a pause, I would say. The yen still weak. The Bank of Japan looking to do anything. So this could be a opportunity for traders that are long in dollar yen, let's say, for instance, to load up a little bit more. Not saying that is going to happen. Obviously, I don't have a crystal ball. But, just could be an opportunity for those type of traders or those dollar yen traders to get back involved in the market. So, yeah, definitely something to be mindful of. Obviously, other factors start breaking down, like the US dollar index. So, then there's some good to come out of that. Okay. Vincent got stopped at break even. Okay, that's not a bad result. Not a bad result at all. I know it's hard to see profits coming back, but the way I would look at that is that I manage my trade into a risk event. Okay, same with me in euro US dollar. Okay, I manage my trade into the risk event, then I'm happy. Didn't lose anything. Can fight another day. Okay, there's always going to be another trade. So the one thing I would say in those kind of conditions where you're up at, I would have took a little bit off the table. That's the only thing I would have said, because 2.5% is a good return there. Dollar CAD, I did get a little bit of a signal on dollar CAD this morning. I was very interested in this trend breakout here on this candlestick. I was going to look for a long at 136.06, targeting 136.36. Just didn't like the risk-reward ratio on this one. Ultimately, that would have been my target. This was the signal of the alert system. Stop losses, again, to make it any kind of feasible, would have had to mean 20 pips. The previous lows down through here were 37, so that's negative territory, and 200 moving average was 0.5. So, yeah, that would have had to have been an aggressive entry there. The only way I would have looked at that is maybe on the 30-minute time frame for that move to kind of come into play. But I did quite like dollar CAD. I like where dollar CAD is just from sort of the weekly time frame. Obviously, this is an area we found support. Now, we did kind of touch upon this in the past of the dollar CAD price coming into these previous lows. We actually traded through those lows that we were interested in, which were these lows that kind of formed over here, sort of the 132.50. But ever since we've traded back above that 132.50, very bullish indeed, very much like the US dollar index was at that time. And now look, we're coming back into these highs here. So again, now that we're back in highs, I don't particularly like to buy into highs. It just doesn't, it's just not a feasible sort of strategy there. So that was very, very close to that key area, that key support and resistance zone. So that wasn't something I was particularly interested in terms of just from a risk reward point of view. On a strategy point of view, all made sense on a strategy point of view, but just not from a sort of risk reward point of view, not from a trading point of view. So yeah, unfortunate on that one, because that would have been quite nice. I'm just going to keep an eye on that dollar yen. I'm just going to keep a little eye on that dollar yen, half an eye on it, because I do quite like the idea of yen. That could give Aussie yen a little bit of a pop. I've been watching Aussie yen. We did a little video on Aussie yen on how to break down a chart yesterday, if you managed to see that video. What's interesting about Aussie yen at the moment is this kind of setup here. I mean, from a monthly point of view, the market is bullish. We did get a little bit of sort of a pullback last month. Doesn't mean that price can't continue to sort of push higher here, because it was a bit of an inside candle month. This month has started off a little bit bearish. If we start going down the time frames, though, you can see that we're consolidating. If we go down to the daily time frame, it's that classic sort of pattern forming where we've had an aggressive move to the upside. We're then sort of making a downward sort of trend in motion, but we then find a sticking point, which seems to be around about that 93 area. We seem to be kind of finding that as the sticking point at the moment, and the price is kind of, trading around that point. I would like to see price trade above these highs. If we get above 95 here on Aussie yen, I think that's going to trigger a move potentially into 97.50s, these previous swing highs. So kind of keeping an eye on Aussie yen as well. The only difference we've got with Aussie this week, we do have some China PMI data coming up. So, that could cause a little bit of volatility in Aussie yen, especially because if we do see further economic slowdown in China, it could be a little bit of a problem globally. So that could add to the risk on, risk off turn. Now, if we were to get that sort of risk off turn, then I'd expect Aussie yen to be, trading below 93 again. I'd expect price to break lower. If the risk on turn continues, then there's a potential for price to continue to the upside here. But the point is, we're at an area of support. We are consolidating. We need to be aware that we are consolidating, because we know what consolidations can lead to. They can lead to these breakout moves that happen in the market. So yeah, definitely interesting something there. Let's go have a little look at the stock markets, because they're probably performing well off this little move here. Yeah, you can see the Dow, the Nasdaq, S&P's performing well. DAX, FTSE's also having a bit of a rebound from these lows. Really nice area to come into there, the FTSE. Gold having a little bit of a move higher off the back of this as well. Look at that. Boom. Big move on gold. Gold really enjoying that sort of dollar weakness. Now, we talked about gold, was it last week or the week before? I did a video separately on gold, how gold could be the one sort of beneficiary from this sort of this market conditions at the moment. We had a little look at the weekly chart. We saw that we had a breakdown of the $1,900 level, but then the next week we closed back above it. So a bit of that sort of false breakdown mentality there. And I did feel that gold could be the one commodity that really benefited in these market conditions, and you can see that is definitely the case at the moment. That does mean that we probably could see a move up into this sort of $1945 area, even higher. If price was to trade through and breach that trend line resistance, I could probably get rid of these trend line supports now, to be honest. Then 1980, which was a previous sort of bigger term support that we were looking at in the past, could then be tested as resistance. So there's some potential for upside here for gold. Again, I think if you are a gold sort of or interested in trading gold, then just add it to your watch list. It could definitely be something that you need to keep your eyes on as price develops here. So yeah, gold definitely one to watch. Let's have a little look at silver. Oh, that looks like a nice breakout on silver. We've got this consolidation in here. Really good push through on silver there. Let's just go to the monthly. Bullish last month. I mean, that was a good support point that we talked about in the past. I remember doing videos on this one back in September of 2022, and you know that has done pretty well from there, considering. So silver still looking pretty good here. Come back and forth, but look, we tested that $22.40 low. $25 could be next. Bit close to that level now, isn't it? We'll have to zoom out a little bit. 25 in here. Might be good on a short-term perspective. If you were looking at sort of the hourly, maybe. Bit of a pullback in. See what government bonds are doing. Yeah, back below 4.2% now. I don't know why the right tool's gone off here. Let's have a look. Okay, there we go. So we'll see if the 10-year can hold at this support level. A breakdown here at the 10-year could be quite important. You know, a breakdown of that would mean we would get some considerable US dollar weakness. So, yeah, that would be something to really consider, keeping an eye on your 10-year bonds as well. Volatility index down. P500 up. Yeah, okay, so we've done about 47 minutes, guys. I'm probably going to leave it there. It's a little bit of a strange week coming up, to be honest. We've got lots of data coming out, but not a huge amount going on in the markets. Obviously, we're coming into the last week of August now, so probably going to see a little bit of choppy markets. And then September can be really good, so we'll see if it picks back up in September. But I will speak to you again on Thursday. We'll see if there's been any more developments in the market. We'll have that China manufacturing PMI out on Thursday as well, so hopefully that's moved the markets in some kind of way in terms of risk tone. So we'll see what happens there. But I'm going to leave it there. Thank you for your time today. I really appreciate you watching. Thank you for your comments and questions as well. And I will speak to you guys on Thursday. Cheers.